So welcome everyone. Thank you for joining today's webinar. My name's Paul Cam and I'm a client advisor here at Oreana Financial Services. Oreana is a wealth management firm with a presence in Australia, Hong Kong, and soon Singapore, and over 5 billion under advice within the region. We're counting our blessings today on a relatively uneventful transition of power last night in the United States. On that happy note, I'm thrilled to have our two speakers here today to give us our take on the world in 2021. Before we go too much further, I want to highlight the experiences that both our speakers have today that I think really lend weight to the comments that they're about to make. So Isaac started his career in the Reserve Bank of Australia, and his last role was advising the world's largest pension and sovereign wealth funds. Thian has an exceptionally well-rounded career that encompasses business transformation with the Big Four accounting firm KPMG, distressed investing with the investment bank Goldman Sachs, and also operating and investing in small to medium enterprises, in addition to being the healthcare man that he is now, looking at novel ways to cure cancer. So next slide, please, on the Zoom webinar tools, if that's okay. Yep. So just a bit of housekeeping, audio settings, chat. Feel free to chat me if there's anything that that the speakers are talking about, but perhaps we might be able to add in a little bit of interactivity. Or also the Q&A function is also open. So we will allocate time both for Isaac and Thian to go through their presentations, but I'm hoping the real meat will be in the Q&A, given that there is so much going on, so much changing by the minute. Hopefully we will get some active audience participation to make this really useful. So with that in mind, let me set the scene. So Hong Kong's existing restrictions, gym closures, no dining in past 6 p.m. just got extended yesterday for another 7 days until the 28th, which sounds like a lot of pain, but bigger picture, wow. France, national curfew, Spain, curfew till May 2021, UK and the US continue to report statistic after statistic. So there's a lot of disruption. And I guess from Isaac's point of view, the money supply surged in 2020 to exceeded more than what we've seen in the last 1.5 centuries, as per an article on the Financial Times published 2 days ago. So financial markets continue to sweep power on globally, and valuations at the moment defy gravity like wind-swept hair. So to give us frames of reference and I guess how to give us a bit of guidance on how to think about it, Dr. Isaac Poole. Isaac, over to you.
Thanks, Paul. Thanks for the introduction. Thanks for setting the scene, and thanks everyone for joining us today. It is great to have people come along and listen to some thoughts. And really, what I'd like to do today, from my perspective, is share some thoughts on the economy, what's happened, what's driving the outlook, where we are in the economic cycle, what that means for asset classes, and then leave plenty of time for Thian to talk later. So given that we have limited time, let's jump right in and let me set a bit of scenery for you all. So 2020 was a challenging year. It was a year where the economy was already slowing in 2019. So coming into 2020, we actually expected that it would be a difficult year economically. We wrote a lot in 2019 that we thought that there would be a global recession in 2020. And we got one. And we got a recession that was nothing at all like what we'd expected. We thought we'd see a credit-led recession, a recession where there was widespread defaults in the credit markets, and that would drive an extended period of low growth, and central banks would have to step in with supportive monetary policy, and that just was not the outcome at all. Instead, we had this major tail risk. The COVID-19 pandemic is a sort of once in a lifetime tail risk event that is very difficult to prepare for, and it wreaked havoc throughout the global economy. And we saw that with an extremely deep and challenging recession. Developed markets faced a sudden stop. This is something that you never see in developed markets, sudden stops where economic activity falls off a cliff, they happen in emerging markets or frontier markets, in places of very low economic development, not in places like the US. And yet we saw this sudden stop take place, and this is what a sudden stop looks like. It's not something that any of us will have really lived through before, but you can see here just the extent of economic collapse during 2020. The aviation sector was decimated. You see here passenger traffic globally fell 75% in March. Planes stopped flying. They were left at airports. They were people were made redundant. Jobs were lost, and governments were forced to step in to support a really important industry. We had close to 150 billion US dollars globally spent by governments to support the aviation sector. But it wasn't just planes. Cars and other transport was impacted. We can see that car traffic collapsed as we had lockdowns and we had quarantines. In the UK, you can see here a 95% decline in car registrations in March. This is activity completely falling off a cliff. We've all lived through and we're living through lockdowns now, and the fear of going out in public in March and April and early June had a devastating impact on the retail sector. And we see here that retail sales were down 20% in over a year at the worst of the pandemic. And that's critical for the US, because retail sales is and consumer spending is about 2/3 of economic growth. So that was a devastating blow, and it was exacerbated by not just domestic demand falling, but globally demand fell. We observed export and trade virtually come to a standstill, and at the worst of it, exports were down almost 30% in Q2, and they've been very slow to recover. This has been a part of the recession that has been very slow to come back to life. And so when you add all of this up, when you add this sudden economic stop up, what does it really mean for 2020? Well, it means that GDP growth, global economic activity for 2020 is going to be somewhere between 4% and 6% lower than it was in 2019. Now, a negative GDP growth number is bad for an individual country. If the US had minus 4% growth, that would be bad. But globally, we tend to think of plus 2%, a positive 2% growth as being a recession. So having minus 4% is the worst recession in recorded history, and it really goes to show the extent of that sudden stop and the impact that lockdowns and quarantines and a shutdown in services and a shutdown in hospitality and trade, it shows the impact that had on the economy. Now, that's all well and good, but the reality is, despite the virus, despite the pandemic, despite that collapse in economic growth and a corresponding collapse in equity markets back in March, there's been a recovery come through. We look at the US, we look at China, we look at Europe, most developed markets, and now most emerging markets. The economy is recovering. It started to recover in Q3 of 2020. It continued to recover in the last quarter of 2020. And we're now at a period where there is a recovery underway, but there's some risks around that recovery. Now, the big picture, or the important thing from our perspective, is not so much to focus on hindsight and focus on what caused the recession and what might help drive the near term. We like to think about the medium term. And for us, there's a few really important themes that are going to help drive the medium term outlook, and I've put them here. They're not brand new themes. They're ones which started in 2020. They began shortly after the pandemic forced those crushing lockdowns globally, but they've continued and we think they're going to continue to be important for time to come. So I'll go through them relatively quickly, and we'll get to the next slide. But helicopter money is just another way of saying that central banks are printing lots and lots and lots of cash. They're getting it out into the economy. They're providing liquidity. They're providing support for the economy, and that is helping the economic recovery. It is crushing for people who have savings in term deposits, because when interest rates fall to zero, as they effectively have, you are getting a negative real return on your term deposits. So you have this tension between a good, supportive outlook for the economic recovery, devastating for many savers, and this is, in our view, something that is going to persist for the next 5 years at least. Fiscal support, we see that under President Biden, there's going to be more fiscal stimulus. We're talking potentially trillions of more dollars paid out into the economy to support growth, to support infrastructure spending, to help households who are struggling financially. And that's on top of trillions of dollars that have already been spent in the US, and trillions of dollars that have been spent globally. This is the biggest coordinated fiscal package and fiscal stimulus we've observed in our lifetime, if not ever, in terms of percent of GDP. And it is providing significant tailwinds to growth. So that big picture is one of fiscal and monetary policy support that is helping the economy in the medium term, and we think that's going to continue to play out. There are risks, though. It's not all rosy. We still have coronavirus out in the economy. We still have lockdowns. We're still waiting for mass vaccination, and I'm not going to talk about that a lot because we've got an expert here to talk about those things. But I will say that over the last couple of months, governments have become more willing to reintroduce lockdowns, and that's clearly putting a dampener on the economic recovery. The recovery has slowed. It hasn't stalled. We're not contracting yet, but the growth recovery is slower than it was. And there are parts of the world that are really clearly at risk of a double-dip recession. And the longer those lockdowns persist, the deeper that recession will be, and the slower the recovery will be. And that's going to have implications for markets and the recovery. And finally, US and Chinese tensions. This has become a pretty standard part of our life over the last several years under President Trump. It was a challenging environment for US and China, and for trade and for businesses operating across the two jurisdictions. We know that under President Biden, those relations will remain tense. They're going to be difficult. That we're not going back to the way the world was. But we do expect that that under President Biden, we will see a slightly more coherent and a slightly more clear strategy on US and China, and one where China is seen less as an existential threat to the US and to Western democracy, and more of an economic competitor. And that's an improvement, at least over the existing set of relations. So what does that all mean? Just to tie that all together, I think those themes are important, and it's important to acknowledge them. But really, what I try to do and what we want to do is know, what does that mean for the medium term, and what does that mean for the economy? What does that mean for investors? And what does that mean for people who are having to live with this? So you can see that the big picture that I talked about, monetary policy, fiscal policy, these are positive for the economic outlook. They will support growth. They're going to support the recovery. They're going to do that for the next 5 years, and they're going to be positive tailwinds for equities. It's not going to be great for people who are saving in cash. We know that cash rates are near zero. We think they're going to stay there for some time. That will be a challenge for some time to come. Income yield will be difficult to find. The lockdown is negative for the economy. The longer that persists, the more chance we have of a double-dip recession. The more chance there is that the economic recovery stalls. The more chance there is that we have an outright contraction in growth at some stage in the first half of this year. And that is a near-term and important risk to the outlook. US and Chinese tensions, on the other hand, are a risk, but it's not so clear what this means for the outlook, because on one hand, tensions are going to persist. We've heard that from Biden's administration. We know that to be the case, but they're probably going to improve relative to where they were under President Trump's administration. So we could actually get slightly better growth than what would have obtained under President Trump, although not as good as if there was free and open and trustworthy trade going on between the two nations. Similarly, for equities, they could perform better under those improved circumstances, but they could still be a dampener relative to what otherwise would have been the case. So in summary here, we've got these themes, and we can look in the rearview mirror and say that 2020 was a terrible year for the economy, fantastic year for investors. 2021 is looking likely to be a much better year for the economy, but some risks for investors and challenges for investors, and that's really important. Importantly, the vaccine is critical to that near-term view. It's also critical to the medium-term view. It can change the way that the economy operates, and the effectiveness of the distribution is going to really impact the way that we see the economic recovery take shape in the near term and how that flows through to the medium term. I'm going to pause there on that note and pass to Paul and Thian to get stuck into exactly that point around vaccines.
Yeah, so thanks for that, Isaac. Just on vaccines, so Thian, I asked to come along and sort of share his views. So at Oreana, we focus sort of on the longer term view and delivering sustained growth throughout the market cycles. But at the same time, COVID is an issue where there's still so much uncertainty surrounding it, and it is evolving very quickly for everybody. So I guess my purpose of inviting Thian is to talk through COVID through his lens. So Thian's primary focus is actually on the development process of drugs, so that he will have some insight from that. But to reiterate sort of some of other Thian's previous experiences in business transformation, in distressed investing, and also with small to medium enterprise. So I think Thian will provide some insight and more importantly, just how he thinks of the issue. So Thian, without further ado, over to you.
All right, thanks very much, Paul. So great to meet everyone. Thanks for the opportunity, and hopefully one day we'll be able to see people face to face and instead of on these computer screens. And today I thought I'd talk a little bit about COVID-19, both from a broader perspective as well as from a process perspective. And I'm not a virus expert, but I am running a company which is developing a cancer treatment. So we have some sort of an appreciation of the regulatory process of getting vaccines or drugs out there. But firstly, if we could get to the next slide. I don't know if I've got control yet, but that's okay. If we could go to the next slide. Everyone's been drowning in COVID-19 news. So rather than sort of drill into details and get lost in the details, I thought it'd be useful to take a step back and look at a framework in how to assess the impact of COVID-19, and hopefully be able to read the tea leaves in terms of trying to figure out, when things will happen, what the impact will be, which countries are going to do better than others, et cetera, and rather than get to the answer, is get to how to think to get to the answer. So when I think about the ecosystem of COVID-19, it's a lot more than just the vaccines. It's a lot more than what you read in the papers and medical. And frankly, a lot of it is about how people are complying, how the governments are actually managing. So a lot of it is a management issue and a compliance issue, not just a medical issue. So if we look at the first sort of bucket at the top, which is essentially preventing the spread, that's a really big issue. And these are the things that you read about, sort of masks, having these restrictions, lockdowns, which essentially when you're in emergency room mode, you've just got to shut everything down because it's a bit out of control. On top of that, there's also the testing and tracing. Now, testing and tracing is so important because one of the challenges with COVID-19, as opposed to the first SARS virus in 2003 and nasty viruses like Ebola, they're much more likely, if you get infected, the death rate's much higher. But your infectivity only occurs once you've got symptoms. So it's really much easier to sort of figure out, oh, that guy's sick, let's lock him up and sort of isolate him. Whereas with COVID-19, one of the problems with managing it is most infections occur with asymptomatic people. So people are walking around all happy and not knowing they're infective, and it just spreads like wildfire. And that's one of the challenges that I think a lot of economies haven't really figured out, not just the testing, which is very sporadic, even at best of circumstances, and more importantly, the tracing. And this is where certain countries that have an ability to trace where people have had without asking for their permission versus those that say, I want my rights, have been more effective. Now, it's not just each bucket, it's how each bucket interacts with the other buckets. So there's a little bit of thing called herd immunity, and essentially at a point when you get to, I don't know, 60, 70, 80%, whatever it might be, you're essentially at a point when enough people have it that it's not going to spread, and you've got the virus under control. And you've probably read about people saying, well, why don't we just rip the Band-Aid off and just get it over and done with? I mean, the death rate's so low, who cares? Unless you're one of those people that unfortunately are suffering. Now, the issue here is the interaction between preventing the spread, which links to the protecting the individual against getting infected, and also the treatment. And part of the this treatment links to, for example, the healthcare system. So as an example, if you look at in the US and the UK, for every 1,000 people, there's about 2 hospital beds. In Australia, it's about 3.5, 4. In Hong Kong, it's about 5 hospital beds per 1,000 people. Now, if you let it rip, it doesn't take a lot of to tip the scales to a point when you've overloaded the sort of health system, the hospital system. And that's already happening in the US. For example, a number of parts of the US, like in the West Coast, where you're literally 100% capacity in hospitals. So what happens if you've got more people getting infected, then suddenly you've got a lot of people that would unnecessarily be casualties when they otherwise would have just survived because the hospital system can treat them. Now, the other side of this and the other cost, which is less widely known, is other diseases. So if your hospital's at 100% and you're actually, you've got a non-COVID illness, you can't get treated at a hospital. And in fact, even before this occurs, if you read the statistics, there's been a spike in terms of non-COVID related deaths. So for example, heart disease, cancers, because people aren't going to hospitals, they're not following up on treatments. And so there's a hidden cost there. So that's one thing, is preventing the spread. And that's a public health challenge that you can start looking at. The second bucket to think about is the individual and how they're protecting themselves. And this is where, just doing Zoom conferences, reducing exposure, wearing masks. A big thing is actually airflow, which is essentially just keep well ventilated. I'm sure you've seen those videos of where all the droplets go, etc. It's amazing how quickly they get out of the place you're in if there's good airflow. There's the typical hygiene, washing your hands, etc. Don't touch your face, blah, blah, blah. There's even things that can help, which is strengthening the immune system. There's a lot of the growing amount of evidence showing that things like vitamin D might be helpful. People with fairer skin seem to do better than people with darker skin, and vitamin D is linked to sunlight. Literally getting good sleep they've done research on flu, where literally you have multiple increased chances of getting the flu if you don't sleep regularly versus sleeping well. And so there's a lot of hot, cold showers, saunas. Apparently there's some data in the Scandinavian countries, just going to saunas can help. So things like that, they actually measure biomarkers on immune system strength. And so there are things that can be done. And so that might be a sort of a hidden factor that's much more behavioral than anything else. Obviously, vaccines are the big thing that people are watching now, and that's going to protect you. Now, the other thing that may not be as obvious is going to be how that protection links to the prevention of spread and treatment. So, for example, you would think or hope that by being inoculated with a vaccine, you're protected yourself. But does it stop you from spreading it to someone else? That, I don't think there's been any data to show that that's the case. It seems intrinsic, it should happen, but no one's really tested it. Now, what does that mean for us? When can we get to travel? When can the global economy start kicking up again? Well, I think there's a dependency here, because if you're a country, like in Australia, Hong Kong, I don't really care if someone flying in is not going to get sick. I care that he or she is not going to infect my people. And so till you get that data, it may take longer for that flow of people and et cetera to resume to a normality, shall we say. The other aspect of vaccines is not just a protection, it might even flow into the treatment. So one of the vaccines seemed to indicate in the tests they've done, and all the testing on effectiveness is all done slightly differently. So you kind of have to dig into the details there. But one of the vaccines, so for example, the vaccine effectiveness in some of these vaccines, again, I'm not going to talk about which one's better or worse, but some of these vaccines are 90–95% effective, which is pretty amazing, because like the flu vaccines, which has been fully approved by FDA, is 40–60% effective. So these things are pretty good. Now, the problem is if it's 95% effective, what if I'm one of the unlucky ones that's in the 5%? I'm not too happy about that. Nothing is perfect in these situations, but at least in one of the vaccines seems to indicate that even those that got infected or got sick from even after having the vaccine didn't become very sick. And so that means that you have less impact on the treatment sort of side of things. So there's some things to think about in protecting it and how that interacts with the prevention of spread and the treatment. Now on the treatment side, bear in mind that most people don't need to go to hospital. So the majority of the population that is infected may not even get tested. And those that get infected/tested are just going to stay at home and they're going to be fine. It's only a smaller percentage that you see going into the hospitals. And it's only a small percentage, I think they estimate 20% of those go into more serious ICU type of cases. So if you think about what you see in the news where you've got all these hospitals overflowing, you've got to extrapolate that out to the broader population, those that have been at home, those that have been exposed, et cetera, et cetera. There's a longer term issue, which is these long haulers. And I believe Chinese University of Hong Kong a couple of days ago released this, or recently released some research where they looked at people that went to hospital and from COVID-19. And after 6 months, 80% of them still had at least one long-term sort of problem. And at least 30% had at least 3 conditions that are long-term. So this long hauler issue may have impact longer term, which may impact the ability for people to sort of get back into the workforce. So there are quite a few issues here. The good news with treatment is people are actually getting better. So you've noticed that the death rate per hospitalization has actually dropped. And I think that's because the best practices, people are sharing things that work and don't work. You think about originally everyone was talking about ventilators, and that really isn't a big driver of saving people. There's certain treatments like steroids like dexamethasone. seem to be more effective when people are in a very late stage and have, they have a cytokine storm, etc. Even simple things like putting someone in their tummy instead of their back seems to sort of help. And that was based on research that was done previously with other lung diseases. So the treatment side of things seems to be improving. But again, if you think of an iceberg, what you see in the press is much more focused on the treatment, on the vaccine and protection side. And then there's a fluffy sort of public policy side, but that probably has a much bigger economic and social impact than you would otherwise be exposed to. So anyway, here's some, hopefully this framework gives you some ways to think about these issues as you try to read the tea leaves on investment strategies, etc. If we could go to the next slide, perhaps I could spend a little bit of time here about the process of getting a drug approved. And part of the reason of that is I get a lot of people saying, I read about these new drugs and they can take like 10 years to get approved. And then this COVID-19 vaccine, we've got a bunch of them approved, or at least emergency approved, within less than a year. So is it an amazing feat and accomplishment by humankind and people putting money in, and we're just so amazing that we got together? Or should I be really scared that there's something we missed? So I thought I'd just walk through the process and kind of see where it leads. So with a typical drug, whether it's a vaccine or whether it's some sort of therapeutic, etc., that's what's known as the discovery phase. And this is the phase where you've got these scientists, labs, universities, etc., and they try to figure out, this secret sauce to sort of cure some sort of disease or have some sort of vaccine. This process can take years, multiple years, and it's not just finding something that kind of works. Typically, if you've got a really good technology, you can actually have dozens, hundreds, or even thousands of permutations. Because sometimes they tweak the compound a little bit. They add a bit here, they change it a little bit there. Maybe it becomes more soluble. Maybe it changes the characteristics so that it becomes a little bit more effective for the condition that you're trying to treat. And so you might say have 100, sort of good candidates, and you have to choose one. And once you choose that one, that's when you start moving into the development stage. And that's essentially when you've made a decision. You might actually spend millions of dollars moving that one compound around and find, oh, it doesn't really do what we thought it'd do. Let's play the snakes and ladders and go back and try compound number 2. And so that's why there's a really big reiterative process. And then you've chosen this one compound, it works in a test tube, but does it actually work in a human being? Well, you can't start on a human being yet because the regulators obviously are very concerned about not making people sick from the treatment. So you test it not just in a test tube, you can test it on animals, and typically it's a couple of species of animals, and just to make sure it's safe. And that seems logical. Maybe some things that people don't think about is even before you have the first treatment of the first patient, you've got to think of things like, for example, formulation. So you might have this secret ingredient that does something amazing, but you've got to put it in a pill, or you've got to put it in a injection, or you've got to put it in a cream. And they've got all these other chemicals in there. And you also got to make sure that they fit together. And you also have to make sure that the chemistry is not going to change after 3 months, 6 months, 12 months, because then whatever you're injecting today may not be what you're injecting next year. And that could change the results. And so there's a lot of formulation here. It's possible that with the vaccines, they didn't have enough time to spend that they would have liked on formulation. Remember that some of these vaccines need like some really crazy -70 degrees to get stored. Now, if they had more time, maybe they could have figured out a way where you don't need to have such a low temperature. But again, time was more important than money. It was more important than anything else. So certain things had to give there. And so formulation is a really important part. Another important part, which is typically not appreciated, but is even more important with COVID, is manufacturing and scale up. Because you might be able to create enough of this drug or magic ingredient for a lab, or for 100 people, or for 1,000 people. But if you start making it for 1 billion people, that's a different scale. And on top of that, especially if you're a guy getting jabbed with this vaccine, you want to make sure that whatever they were testing on people, it's exactly the same as what's tested on you, or put in you, whether you're the first person, the 100th person, or the millionth or the billionth person. And so there's a lot of work there to get to preclinicals done. And that's why that can take a couple of years sometimes. And once you've got that, then the regulators let you start a phase 1 trial, which is the first in human trial. And even then, they're not even checking if it works. All they're checking is it safe, typically in a smaller population. Now, after that, then you go to a phase 2, which is testing, does it work on a smaller scale? And then phase 3, does it work and is it safe on a larger scale? And so that all takes time. Now, what's happened with COVID-19 vaccine is they've merged the phase 2 and 3. And they said, you know what, let's just spend the money. If it works, great, we can save some time. If it doesn't work, well, time was really important, more important than money. And then ultimately you go to regulatory approval, which can take a year or more. In this case, the vaccines have had emergency regulatory approval, so they haven't finished the full, checking the boxes yet. But given the urgency, they've actually felt comfortable that there's enough data to support the emergency approval level. Now, if you sort of take a step back here, it's quite an amazing feat that within a year you've been able to do all these things. There was almost no new discovery done because there's no time. They looked at existing technologies which was almost ready to go. And then there was basically this squeezing of the process. And frankly, a lot of the development of these new vaccines, and there's more to come. So there'll be more pipeline of these things. The process is underway. The bigger challenge, I think, now is actually on the right-hand side, which is the market and supply chain. And this is where typically in a new drug, you've got to basically communicate and educate the doctors, the market, and you basically get people to sell the product and deliver it, etc. But we have a captive market right now. Everyone needs the vaccine or wants the vaccine. The only question is which one can we get access to and which one do we take? Now, when you start, selling or delivering, a million vaccines, that's one thing. If you're trying to do 1 billion, actually, and you multiply by 2 because you got to have 2 jabs, it's a much bigger issue. And that's where the concept of the medical approval that you all read about is going to be an important issue, but it's going to be more and more important to start thinking about the supply chain and the leadership and the management, because the pharmaceutical companies have been working on having enough scale and have done an amazing job in actually scaling up. It's still not enough. There's still insufficient quantities. So now you've got to figure out which countries, which customers are going to get how much. And then typically you get into a country, say in the US, it's a federal process where you get it into the federal process. They have to coordinate with the state process. And that hasn't been done so well in the US, at least in the last administration. Then the states have to go with the local jurisdictions. You may even have to go to these clinics. Some of these clinics and centers don't exist, and they're just makeshift centers. And then you've got to train up thousands, tens of thousands, hundreds of thousands of people to learn how to put the jab in. And then you've also got to figure out how to track all these 1 billion people because they have to have a second jab. And so that is something which I think is hard to predict. I think President Biden is looking at 100 million in 100 days or something like that. That's a really big logistical challenge, particularly because left hand doesn't necessarily know what the right hand's doing. And a lot of the infrastructure has been sort of broken a little bit. And that's something to watch out for, in addition to just looking at sort of what you read about the vaccines.
So, Thian, I'm just going to interrupt you there because we're kind of running short of time, if that's okay. And I just had a couple of questions that I wanted to quickly fire off at both of you since I've got you here. Just a couple of questions that have come through from people. Just let me bring them up. First one to Isaac, if that's okay. So you've hinted to downside risk in the very short term. So generally when things, touch wood, they do happen, people fly to safe haven assets. Now with so much liquidity floating around, how do you see that playing out? Like in terms of opportunities in the short term, will they still be there given that there's so much liquidity around?
Yeah, I mean, central banks have done a great job of pumping liquidity out there, and it means that if there's downside risk, there's still lots of cash sitting there looking for opportunities. And I think from what we see, people have sort of been sitting a little bit on the sidelines, waiting to buy equities when they correct. And so this near-term volatility is potentially an opportunity to buy back into riskier assets at better valuations and get better returns.
Yep. So, and just a follow up on that, there are so many charts floating around in terms of that increasing disconnect from the financial economy and the real economy. I guess what's a framework that you look at that, and is there a scenario where you start seeing the system fundamentally crack per se, and how would you sort of address that concern?
Yeah, we tend to look at those big risk questions through a scenario lens, and so we'll think what could go really well and what's a potential upside scenario, what might break apart, and what does the downside scenario look like, and then we try and balance those risks appropriately within the portfolio so we still have some protection to the downside, even though we have quite a positive outlook over the medium term.
Are you happy to sort of comment on, I know that there are extreme scenarios, but is there or how you would look at that problem within your scenario framework?
Yeah, so a plausible downside scenario is one where the Biden administration puts so much fiscal stimulus out that we get an inflation blowout, and then the Federal Reserve is forced to hike rates to protect against inflation, even though the economy isn't really growing well enough to support higher rates. And that would plausibly cause a recession and a challenging environment then for equities, but also for bonds because inflation is so high. So that's how we'd sort of frame that scenario, and then we think about the portfolio implications.
So, but just again, of curiosity, that's still a fairly low or very remote scenario given what we see so far. Is that a fair characterization?
Yeah. It's low risk, but quite material, if that makes sense. It would impact the portfolio, so we think about it, even though it's probably a 5, maybe 7% probability.
Good stuff. And Thian, so question for you. Look, a lot of the effort has been spent on looking at the economic standpoint. Just are you happy to elaborate a little bit more on sort of the more operational side, the risks that you see in terms of getting the right policy responses from the masks, from the vaccines rolled out? Are there a couple of, I guess, key pinpoints that you would focus on as things evolve and you see them as key bottlenecks or issues that we should focus on when this whole thing unfolds?
Yeah, I mean, I think, as I mentioned earlier, I think it's a lot of the success or otherwise is going to be less on an individual factor, but much more around how the leadership and the management is on the multiple factors. So how well is the government coordinating these prevention type policies? How much is the population complying with these policies? Will be one thing, and then you look at all the different subsets of that, and then look at the there are a lot of obvious things that don't cost money, don't depend on vaccines, even though vaccines will be the thing that really helps. But in the meantime, until they roll out, are people complying with the masks policies, with hygiene, with not spreading it, until the point and buy enough time. Basically for the vaccines that come in. And so when you look at it from that perspective, there's no magic bullet. It's actually a lot of blocking and tackling. communication and leadership that I think is going to be the challenge. Now, if we sort of turn back 1 year ago, it was a slightly different sort of situation because we didn't know how bad it would get. And also more importantly, we didn't know whether the vaccines would take a year or 2 years or 5 years. So we didn't know how much longer this would take. At this point in time, we've got a few really strong candidates for these vaccines. So there's much more predictability around the science side. And now the focus for the coming year is how well are the different markets or countries managing the transition of buying the time with these policies and compliance and activities with when do they get the vaccines and how long will it take to actually inoculate people. And then I think that's going to be helping you get that answer.
Yep. So fair characterization to say actually a lot of the sort of softer factors matter nearly just as much as the science behind the vaccine. Is that fair?
Absolutely. I think there's an incredible progress done on the science,
Yep.
and just like a lot of things in leadership, it's the soft stuff that's the hardest to do. And thankfully, at least we've got the hard stuff. A lot of that's been progressed this past year.
Fantastic. Okay, well, that's pretty much all the time that we have assigned today. Thank you both, Isaac and Thian, for your time in participating today. The deck and the recording will be sent out within the next couple of days. If there's any further questions from the audience, feel free to direct them to me and I'll send them to Isaac and Thian respectively. Again, very trying times, and thank you both for giving us a framework or considerations in terms of how we think of it, and hopefully 2021 will be much better than 2020 was. Thank you everyone for your time and have a good one.